This is basically the mechanism for taking, if I sell a product and I sell it to you on an invoice, it's a tangible product, like even a bottle of water, okay? I can feel and touch it. I can sell it to my 401k plan. So it's a sophisticated strategy to reducing business. Because I'm selling that, you'll see in a minute, when I'm selling it and taking a discount on it, I'm reducing my taxes and I'm shoving that money over into the 401k plan. Hopefully it's a Roth 401k plan. The easiest way I get people to understand what this is, it's like skimming money off of your business. Everybody understands skimming money, okay? But it just so happens it's legal, okay? So there's nothing illegal about it. When a business makes a sale, they have taxes on 100% of the profits then. Many times the sales are made via accounts receivable. If you're selling for cash, you don't have any receivables. If you're selling on an invoice, you have a receivable. Even though you didn't receive the $100 or the 100% of the money, you're going to have to pay tax on it. That's just the way accounting and taxes go. So tax fairness example is a sale of $10,000. It costs me $5,000 just for that product that I'm sold. I make a $5,000 profit. Taxes at 35%, it's going to cost me $1,750 on that $5,000. In many cases, the liability, the taxes will exceed what I made on it. So right now in this situation, if I have to pay taxes, my taxes due are $750. I haven't received a dime, so I'm in the hole. $1,750. That's cash out of my pocket. What do? Businesses have been selling their receivables to commercial people, other organizations. I need cash. What do I have to sell? I got my receivables. I'll sell them to Joe, the factorer over there, and he'll give me a fraction of what they're worth. And then my clients or customers, when they pay, they'll pay Joe. And basically, like I said, they're selling them at a discount. The business books the loss. So I sold for $100, but Joe's only going to pay me X amount of dollars, maybe 80, for what I sold him. This is the factoring. It increases your pension plan assets. That's my goal. I want more money in retirement. I don't want to pay taxes now. Either I don't want to pay them, I want to pay them later, or I don't never want to pay them. How do I do it? So this is you convert your business profits into a retirement plan. What's not to like about that? My profits I have to pay taxes on. I don't want to avoid it. Reduces your business taxes also. This is the process that you go through for factoring accounts receivable. We have to really set up a 401k plan, and then the product is return of the product to the business receives. When I sell that product, then I get an IOU or a receivable, okay? In return, that's what I receive. Your company then really sells those accounts receivable to your 401k plan at a discount, okay? Basically, because it's me, I am the company, but I have my plan over here, it's a different entity. So basically, I have to deal with somebody other than me, so I'm going to make money on it. If I do a transaction with somebody, a stranger, I'm going to make money. Why don't I do it with my 401k plan and make money also? So I'm selling my accounts receivable to the 401k plan. When the customer pays off the accounts receivable, the cash goes to my 401k plan. It doesn't come to me because I already sold that asset. But what happens is basically my pension plan is really building up in value. And basically, when I'm doing this process, it's basically, we're at roughly about a 5% discount rate. So it's like, if I sell you a $100 invoice, I'm going to get $95 back from my pension plan. And the pension plan, when my customer pays, is going to get the whole $100. The government, this is really no problem with the government. It falls under the Department of Labor, which governs all the pension plans areas. Has to be done with a 401k plan. It can't be done with an IRA. So there's no problem in doing that, the factoring. Again, you make a sale, $100, sell those accounts receivable at a discount. You get paid $95. You collect those accounts receivable, and the business profits, because I only got $95, my profits in my business are down. But what I've done is I've taken, in essence, that $5, shoved it over here into my Roth 401k plan. Okay? Not deemed a contribution. It's basically, I have a Roth 401k plan and it made money. That's the way it makes money. That $5 becomes non-taxable because it's in my retirement plan. So my $5, because I'm turning over my accounts receivable every 30 days, that 5% there is multiplied times 12. So what's my yield? My yield's 60%. I have a company in North Scottsdale that I set up several years ago with this plan. They are currently factoring about $300,000 a month through the plan, like that, exactly like this, and their annual rate of return is 53%. And it's in their Roth 401k plan, so they will never pay a dime of tax on that money. It's basically a doctor. They're in a specialized business. A doctor and his lawyer wife. They checked me out and the plan, whether it was legal and all that, on the front end. They never let me know the results, but I assume if they wouldn't have went through with it, if I didn't check out. But they are making 53% rate of return, and their Roth 401k plan is now a multi-million-dollar entity. So there's more than $2 million in there. Okay? And so it really works really well. Here's an example. If you do $1 million, your net profit's $100,000. Tax rate, again, about 34%. Okay? If I discount those accounts receivable, I'm gonna take and skim $1 million right off that top of that $1 million. So that's going to give me 50 grand over here in my retirement plan. So I'm reducing my profits by 50 grand, and I'm increasing my retirement plan by 50 grand, and it's all tax-free. My tax savings on this 50 grand that I'm reducing on my business side is saving me another 17,000. 17,000 that I will never pay because it's over in my retirement plan. Okay? And again, to do all of this, you need something that you can feel and touch. I can't do it with my services. I'd love to. I've been looking a long time. I have figured out certain mechanisms, but this is not one of them. Okay? This, like I said, 50% tax reduction plus a 60% rate of return on the 401k. That's a 110% rate of return. Now, when you put that into to perspective, that's 110% doing exactly what I was doing before I got into this program. Okay? Because I was earning 0 over here. Now I got into this program and I'm earning 100%. And there is no fees, no commission. They do not even call me on what invoices they're going to factor. They do have to come to me once a month. And I'll show you what I need to do for them. But it's required by law. So it's really basically, and you're dealing with the same customers. You're not dealing with some speculative, investment. So you're paying less taxes, and your pension plan is making money. So you're reducing your income tax again, increasing your pension plan, and the other aspect, since my receivables here are now in my retirement plan, they're not subject to my business creditors. I don't own them. My plan owns them. So if you're going to sue me, don't look at my accounts receivable because they ain't there. You can still make the normal contribution. What I'm finding is once you start this snowball with a contribution, the game becomes how fast I can build this without contributions. Because contributions are insignificant anymore. Because basically, if I can do well and build it with profits, they will be far greater than my contributions I could ever make. Disadvantages: there's additional cost. There's a setup cost, monthly cost, maintenance cost, mainly to me. Additional administrative and tax compliance. Okay? Possible IRS scrutiny. On any of this stuff I'm talking to you today, I've never had an IRS audit. Knock on wood. And the normal agent doesn't know this stuff. As a matter of fact, we have had audits on investments with that part of the 401k owned, and it went through, no questions. There's certain, you've got to follow certain rules when you set these up. You have to use a market discount. I can't pull a discount rate out of my hat. I have to have somebody else come in and say what they would discount my receivables for. And if any of them go bad, the company, have to rebuy them back at full face value. So I have to make at all times my pension plan whole. The other requirement is I can only use half of my money in the pension plan to do this stuff. The Department of Labor says, I don't want all of your money exposed, so only use half of it. And like I said, you have to have tangible products. Some years ago, I had a client come in from California, and they were running pizza franchises. Now, as far as I know, when you go in to buy a pizza, you pay in cash. So there isn't any receivables. Now, the question becomes, can you create a receivable in a pizza franchise? Because they had about 4 or 5 stores. And we figured out a way to do it. Because each one of the stores bought product, flour, whatever they needed. So we set this company up here, which was a supply company. So each one of the shops, when they bought their supplies, I owe you. Well, we took in those invoices, IOUs, accounts receivable, factored them into the pension plan. Now, the one caveat is I have control over the business checkbook. So you saw my example at 60% rate of return if I pay in 12 months. What happens if I pay in 2 weeks or half a month? My rate of return doubles. So now my rate of return on my factoring is 120% a year. Now, how fast does that build up your 401k plan? And what other investment, comparable investment out there on the street are you going to get that you pay no fees, no commissions on? You have ultimate control over that investment, who you're selling that to. Okay? So it's like if you've been selling to Charlie for 30 years and you know he's paid you every invoice to date, what do you think he's not going to pay you the next one? So it's like you're really kind of assured that that's a pretty solid investment. And I'm making more money doing this than I could anyone out on the street could promise me, ever. And consistently, year after year after year. As long as I'm selling pizza or as long as I'm selling bottles of water, I'm factoring into my plan. This is really a win-win for everybody, except the IRS. It's like I tell my clients, the deal is you win, I win, and we screw the IRS. And they like that. But it's legal, okay? And that's what you really want. I want to be able to go, if I need to defend this, and cite tax law and simply say, here's the rules. Tell me the rule is wrong or whatever. A few years ago, the Department of IRS handles this, but Department of Labor controls it. But the IRS did a review of this area, and I wrote a letter to Washington, but they left it alone. So they reviewed this area, and this was set up some years ago. Like I said, it lowers your taxes, and you've got ultimate control over your receivables. They're not subject to lawsuits. It's unmatched. You can't ever come up with another investment that'll match it. I already went over this. This is a company on North Scottsdale. It sells products to a hospital for a number of years. They do this internal factoring for several years. 300 grand approximately a month, and they make a 53% rate of return. You know, and the only part with me and this company is basically I go by well over a year. I never talked to him. And I feel guilty. So I make it a point to go in and see him and stop and how things are going and whatever. Because all I do is get emails. Here's my receivables, check them out. Here's the invoice and the okay letter. That's the process. You know, I would hate to tell you how much time I spend on it. But it's basically, here's an analysis of what is it worth to you. Okay, I'm going to charge you $4,500 to set it up. And I'm going to charge you at a minimum $250 a month to do what the Department of Labor says you need done, which is basically make sure you're staying within the rules. That comes out to about $3,000 a month or a year. But look at what you're saving, and you know and that's one time. You know, this is a one-time charge. This is an annual charge. But you know, this is the only fee that you could possibly construe. But it's you know that they're building up their 401k plan beautifully. That's my information. Generally, I get calls from everywhere. Do this across the country. So if you have any questions, need any help, let me know.